Well, stocks moving higher today as markets look to continue the record-setting run to start the year. And with inflation cooling, the labor market solidifying and the economy expanding, our first guest today says that as Q1 comes to a close, the soft landing narrative remains intact. Let's welcome in State Street Global Advisors Chief Investment Strategist Michael Aroney. Michael, good to talk to you. We've seen a number of firms really up their S&P 500 targets given the run-up that we have seen so far. Where do you stand on that right now?
So it is hard to bet against stocks at this moment. As you mentioned, the economy continues to expand, the labor market's in good shape, inflation's moderating, earnings are growing, and consumers are spending. That is a formula for risk assets to continue to do well. The only thing I would highlight, Akiko, is that with valuations where they are and markets at all-time highs, I do think that the risks are likely skewed to the downside. It's just hard to envision what is that risk today. Perhaps it's the Fed remaining too restrictive for too long and slowing the economy more than expected.
What about Michael's sentiment? That's another kind of variable some strategists have flagged to us on the show. They're looking at those surveys, Michael, and maybe it's too many people on one side of the boat. How much weight do you give sentiment?
Josh, it's interesting. Just before I got on air, I checked out the AAII survey. I had to do that really slowly. But from my perspective, what was interesting is the bullish sentiment's around 43%. On average, it's around 37%. And both neutral and bearish, they were kind of in line with historical kind of averages on those figures. So to me, when I'm meeting with investors, they continue to be fairly skeptical of this rally. You mentioned in your opening around the consumer confidence today. So people feel really good about where the economy is today, consumers. Yet 6 months out, they're a bit anxious. Well, that wall of worry could feed further into this market rally. So I think there's still, despite some views that sentiment's kind of toppy, I actually think that there continues to be a fair amount of cash on the sidelines and a fair amount of skepticism, and that could drive this rally further.
Is this the time to put that cash to play now, though? Or Michael, you think you keep the cash on the sidelines given some of those potential headwinds you just highlighted?
Akiko, I think it matters kind of where you consider putting that cash to work. So certainly stocks and risk assets, I think, are positioned nicely for the balance of this year. However, if you were to give me some additional money, I'm not sure I would run right out and purchase the Magnificent Seven or kind of the top heavy market cap indices, given where valuations are, given where expectations are. However, if I look at things like cyclicals, small cap stocks, value stocks, there's actually some more valuation, kind of relative valuation opportunities there. And sure enough, one of the good things that's been happening in the last month is finally breadth is improving. Energy, materials, industrials, financials are now performing pretty strongly in the last month. That suggests to me that folks feel good about the economy. Inflation's a bit sticky. Some of those will benefit from higher inflation, but they're not envisioning a scenario where the economy enters recession. And so I think it's really those relative value opportunities that are a bit more interesting today than maybe the top heavy index or the Mag 7.